Hello friends, welcome to this April edition of Monthly Viewpoints. On the global front, in the first half of March, we saw turmoil in the US banking sector which led to increased global volatility. However, with inflation in the US far above the Fed's 2% target, the Fed continued with its rate hikes, raising rates by 25 basis points at its last meeting. However, we may be close to the last Fed rate hike. Coming to India, there are some downside risks to the FY23 GDP growth forecast. However, we remain confident of our GDP growth projection for FY24 at 5.8%. In fact, today the RBI governor projected FY24 GDP growth for India at a high 6.5%. In addition, the RBI also maintained the policy rate at 6.5%, which is positive for markets. In terms of other macro parameters, India's current account deficit for the third quarter came in at a sustainable 2.2% of GDP. Given that oil prices are expected to remain between the $80 to $90 per barrel range, that should be manageable for India. In terms of earnings growth, the current environment of high interest rates may impact demand for certain sectors like auto, consumer durables, and real estate. However, we do not see any material downside to our projection of 13 to 15% earnings growth for the Nifty. Given that consumer sentiment remains strong, there are green shoots of rural recovery, credit growth is high, and commodity prices are coming down. Despite the macro uncertainty, we have seen a rally in global markets, whereas there has been a correction in Indian markets, and hence the valuations, for example for the Nifty, have become much more reasonable, coming closer to the long-term average. Hence, we have also started seeing FII flows coming back to India. In the near term, we may see Indian markets consolidating at current levels given the challenges of macro uncertainty, high inflation, and high interest rates. However, in the medium to long term, we remain positive on the Indian economy and believe that India will be in a relatively better position given the supportive demographics, the stable government at the center with clear policy reforms, and the boost to domestic manufacturing. Given the current volatile market conditions, investors should maintain their equity allocation near their median level. Any correction in markets can be used to add to the equity exposure. In terms of themes, we continue to remain positive on the domestic focused themes such as domestic consumption, banking and financial services, and manufacturing relative to globally exposed sectors. We provide a basket of funds for investors to choose from. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।